We're always on the lookout, aren't we, for that diamond in the rough, the company whose stock price doesn't, quite reflect its true potential yet.
Yeah, absolutely. But let's be honest, finding those in today's markets, it can feel a bit like a high-stakes gamble
Yeah,
sometimes.
that's exactly it. The speed, the complexity, perceived bargains often hide some pretty significant risks.
You really need to dig deep.
Which is precisely why we're doing this deep dive today into MicroAlgo Inc. That's NASDAQ ticker MLGO.
Right, MLGO.
And this is a company in a space that sounds almost, well, sci-fi, doesn't it? Central processing algorithms, and they've got this big bet on quantum computing R&D.
And what's really interesting there, I think, is the contrast. You've got their current business, making money from algorithms for ads and gaming.
Pretty standard stuff, relatively speaking.
Exactly. And then you have this huge, ambitious leap into quantum computing, which is still very, very early days.
Yeah.
Makes it fascinating, but also challenging to evaluate.
Totally. And for you, our listener, maybe you're trying to get a handle on this quickly, cut through the noise. Well, we've sifted through a lot of the available info on MicroAlgo. So our mission today is really to put on our value investor hats and dissect this thing. We'll look at the business itself, the management, the financials, market view, ownership, and, yeah, the risks. Crucially, the risks.
Right. The goal is a structured analysis.
Yeah.
We want to help you figure out if MicroAlgo, fits with a value-oriented approach.
Yeah.
Moving beyond just the numbers and connecting the dots.
We know your time's valuable, so we'll guide you through the key takeaways. We've split this into two halves. First half, understanding the business, the leadership, and the financial health.
Sound good?
And hey, quick note, if you find this kind of analysis helpful, give us a like and subscribe to Stock Analytics AI on YouTube. We actually have a thing where our Euro $4.99 a month members can suggest a ticker, and we'll prioritize it for a deep dive like this one.
Good to know.
Okay, so MicroAlgo. Let's unpack the business first. Where do we start?
Okay, so fundamentally, MicroAlgo provides central processing algorithm services. Right now, their main clients are in internet advertising and the gaming sectors.
And they're based in Shenzhen, China, right? Operating there, Hong Kong, Singapore.
That's right. Operational HQ in Shenzhen, activities across those regions.
Okay. And a really key thing happened in 2024, didn't it? They got rid of their intelligent chips segment.
Yes, a major strategic pivot. They divested that part entirely.
Which means they are now all in on algorithm services. It sharpens focus, sure, but it also concentrates the risk quite a bit, wouldn't you say?
Absolutely. It's the classic all eggs in one basket scenario.
Yeah.
If that basket does well, great. If not, there's less diversification.
So their performance now really hinges on that specific market.
Exactly. And their revenue model is basically building custom algorithm solutions for businesses. For fiscal 24, their revenue was RMB 541.5 million. That's about, $75.3 million US dollars?
And all of that came from the algorithm services, post-investment.
Correct. And it's also worth noting the vast majority of that revenue comes from mainland China.
Okay. So technically speaking, what are their core strengths? What's under the hood?
Well, it seems to boil down to algorithm optimization, making those recipes more efficient using data intelligence, and then this big, ambitious R&D push into quantum computing.
Right. That quantum piece keeps popping up. It sounds futuristic. What exactly are they working on there? It sounds like a lot.
It is a lot. The list is quite extensive. They're looking into things like deep clustering algorithms, finding really complex patterns in huge data sets.
Okay.
Then there are foundational things like quantum full adders, hybrid classical quantum algorithms for optimization problems. Imagine finding the perfect delivery route, but on a massive scale.
That does sound powerful. Anything else?
Oh, yeah. They're researching quantum convolutional neural networks, QCNNs, for computer vision. So think autonomous driving, medical imaging, security, making sense of images faster and better. Plus, entanglement-based training. QIRO, using quantum principles for blockchain IP protection, quantum image encryption, even quantum edge detection in images.
Yeah.
It's a very broad research scope.
That kind of cutting-edge research doesn't come cheap, I imagine. What's the R&D investment look like?
It's substantial. In 2024, they spent RMB 111.7 million on R&D. That's roughly $15.5 million US dollars.
And as a percentage of revenue?
That's the kicker. It was about 20.6% of the revenue. Over 20 cents of every dollar earned went back into R&D.
So a massive bet on the future, especially that quantum stuff.
Exactly. Huge potential upside maybe, but highly speculative. There's absolutely no guarantee of commercial success, or even when that might happen.
Okay, so who else is playing in this sandbox? What's the competition like?
It's intense. You've got the usual suspects, the tech giants, Google, Microsoft, IBM, with enormous resources.
Right.
Then you have specialized AI and quantum firms like Xanadu, Sequantum, QCware, often well-funded startups focused on specific niches.
And the hardware guys.
Can't forget them. NVIDIA, AMD, Intel, they're all building AI into their hardware and software ecosystems too.
So in that kind of company, MicroAlgo is, well, they're relatively small, aren't they?
Definitely. Compared to the global players and even many of those specialized startups, they're a smaller entity. Their success probably hinges on finding specific niches where they can offer something unique or faster.
Like being agile, maybe?
Perhaps. Leverage agility, offer tailored solutions. But the sheer scale and R&D budgets of competitors, that's a constant, significant threat.
Looking ahead then, what are the growth prospects? How could they scale this?
Well, that 2024 profitability, that came from demand in Chinese internet advertising and gaming. The CEO, Min Shu, has talked about growth intentions.
But the real home run potential is the quantum R&D, if it pays off.
That's the multi-billion-dollar question, isn't it?
Yeah.
If they can commercialize any of that quantum research successfully, it could open up massive new markets.
But that if feels enormous.
It is. Near-term growth depends heavily on the health and, importantly, the regulation of the internet and gaming sectors in China. Those can change quickly.
Right.
And the long-term quantum payoff, highly uncertain. Timelines are likely years away, best case. So, potential, yes, but wrapped in a lot of dependencies and unknowns.
Okay, that gives us a good picture of the business itself. Let's shift gears now and talk about the people running the show, the management team.
Right, so the CEO is Min Shu. He came on board in December 2022. His background includes time at WeMe Hologram Cloud.
Which is MicroAlgo's parent company, we should remember.
Exactly. And he's credited with that strategic pivot to focus solely on algorithms, which, coincided with them hitting profitability in 24.
But timing is good, obviously.
Yeah.
But his tenure as CEO of a public company, it's still pretty short, right? Less than 2 years by that point.
That's a fair point. For value investors who like long proven track records through different market cycles, it's relatively limited public history as CEO.
Who else is on the executive team?
Alongside Mr. Shu, you've got CFO Li He, COO Xiwen Liu, and CTO Chengwei Yi.
And overseeing them, the board of directors.
The board includes Chairman Ji Zhao, CEO Min Shu himself, and then 3 independent directors, Heqi Zhao, Shan Kui, and Wengang Kang.
Anything notable about the board composition?
Well, one thing that stands out is the average tenure for both management and the board is quite short, around 2.4 years.
That's pretty low.
Yeah, and there were some past comments, apparently, raising concerns about the experience level of some directors. Short tenures can sometimes mean big changes or, maybe some instability.
Yeah.
Something to watch.
Okay, let's talk governance. Always critical. What are the key factors here?
Well, they're incorporated in the Cayman Islands, listed on NASDAQ, so subject to NASDAQ rules, so maybe with some foreign issuer exemptions.
But the big one is the ownership structure, right? WeMe Hologram Cloud.
Yes, that's probably the most significant governance factor. WeMe owns a controlling stake, 67.65%.
Wow, that's dominant.
It gives them huge influence over the board, strategy, everything, which obviously impacts minority shareholders, people just buying stock on the market.
Now, WeMe did agree to a 10-year lockup on their shares, didn't they? Doesn't that show commitment?
It shows a commitment, certainly. It prevents them from dumping shares immediately, provides some stability, but it doesn't automatically mean their interests will always align perfectly with minority shareholders down the road.
Right. Different priorities could emerge.
Exactly. Especially around things like related party deals or future capital allocation decisions.
So, the million-dollar question for investors. How well are management's interests aligned with shareholders? Do they have skin in the game?
Well, ideally you want to see execs owning a good chunk of stock bought with their own money. Here, the CEO, Min Shu, his ownership is listed as nay, not applicable.
Which is odd, or at least not transparent.
Right. The CFO, Ling He, is listed as a shareholder, but we don't know how much. So it's not immediately obvious there's strong personal financial alignment through stock ownership for the top leadership.
But perhaps the biggest thing raising eyebrows, alignment-wise, is how they've been raising capital recently.
Ah, yes. That's definitely a major point of concern. They recently issued new shares as part of a convertible bond deal at just $0.08 per share.
80 cents. When the stock has seen, well, much higher prices.
Precisely. And worse, the terms of those convertible notes. They could potentially allow conversion into shares at a price as low as 70% of the lowest market price during a preceding 60-day trading period.
Okay, can you just unpack why that's potentially really bad news for existing shareholders? What does dilutive really mean here?
Sure. So dilution basically means your slice of the company pie gets smaller. When a company issues a ton of new shares, especially at a big discount like $0.80, or through convertibles that can turn into cheap shares later,
Right.
it increases the total number of shares out there. Unless the company's actual value grows just as fast, each existing share now represents a smaller percentage of the whole company.
Like adding water to soup.
Exactly. It can drag down earnings per share and potentially the stock price over time. While companies need capital, relying heavily on financing methods that dilute existing owners like this, it raises questions about whether management is prioritizing shareholders' long-term value. Value investors tend to be very wary of this.
Definitely sounds like some red flags there for the long-term holder. Okay, let's move on then to the third piece of this first half, the company's financial health.
Right. So as we touched on, the big story is the return to profitability in fiscal year 2024. They reported net income of RMB 53.4 million, which is about 7.3 million US dollars.
Which is a big swing from the significant losses they had in 2023 and 2022.
A very big swing.
Yeah.
Revenue for 24, as we said, RMB 541.5 million. Gross profit was RMB 153.8 million, giving a gross margin around 28.4%. Net profit margin came in around 9.7%.
Okay, positive numbers, which is good. But like we keep saying, one good year.
Yeah.
It doesn't automatically mean smooth sailing ahead.
Exactly. You need to see sustained profitability to build confidence.
Yeah.
But looking at the balance sheet as of Dec 31, 2024, there's some positives. Their cash position looks quite strong.
How strong?
Over 1 billion RMB in cash and equivalents. RMB 1,035.9 million, or about 144 million USD. That's a big jump from 2023.
Okay, that's a healthy cushion. What about debt?
The reported debt-to-equity ratio was pretty low, around 15.5%. Suggests they aren't overly leveraged. And liquidity ratios, like the current ratio, look strong too, somewhere between 6 and 7.
So plenty of liquid assets to cover short-term debts.
Seems so. A current ratio over 1 is generally good, and theirs is well above that.
But and there's always a but, isn't there? When you come back to those convertible bonds they keep using for financing.
Yeah, it's this recurring question. Even with a strong cash balance, the reliance on these potentially dilutive convertible notes is, let's say, noteworthy. Investors should keep watching how they manage capital raising and its impact on share count.
Okay. What about cash flow? Profit is one thing, but is actual cash coming in the door from operations? That's the lifeblood, right?
It absolutely is.
Yeah.
Now, we saw a trailing 12-month operating cash flow figure that was actually negative. But that data might be a bit old, likely predating the full positive results of FY 2024.
So we need more up-to-date info.
Definitely. The key document will be their detailed cash flow statement in the Form 20F annual report. That will show if that reported net profit actually translated into positive cash from operations.
And there was a risk factor mentioned about high level of non-cash earnings.
Yes, which makes checking that cash flow statement even more important. It highlights the possibility that some of the reported profit might be due to accounting rules, not necessarily cold, hard cash generated.
Right.
Value investors really focus on strong, positive operating cash flow.
Got it. Okay, finally for this section, let's look at some key financial ratios for FY 2024. What jumps out from a value perspective?
Well, profitability, a gross margin around 28%, net margin near 10%. Those are, okay, sort of middle of the road for the sector, maybe.
But what about returns? Return on equity, assets, invested capital?
That's where it looks less impressive, even with the 2024 profit. The numbers we saw varied a bit depending on the source, but generally seemed modest. ROE, RA, ROIC, mostly in single digits or low teens.
Meaning they aren't generating huge profits relative to the money invested in the business.
Basically, yeah. It suggests capital might not be working as efficiently as it could be. You'd want to see sustained improvement there. Liquidity ratios, as we said, look strong. Solvency looks good. Too low debt. Strong interest coverage, meaning they can easily pay interest on their debt. But those return metrics, they need watching.
And I guess that brings us full circle back to that huge R&D investment.
Exactly. That RMB, 111.7 million, over 20% of revenue, poured into R&D, mostly algorithms and that speculative quantum computing.
Yeah.
Well, while innovation is vital, such a high R&D to sales ratio, especially for a company just back in the black, it really underscores the high-risk, high-reward nature of their strategy. It's a big gamble on unproven tech paying off down the line.
All right, that wraps up the first half of our deep dive on MicroAlgo. We've looked at the business, the management, and the financials. Quite a mix of potential and definite concerns there.
Definitely a complex picture emerging.
When we return for the second half, we'll tackle how the market views this stock, the sentiment. We'll also look closer at who owns it, do a full risk assessment, and then try to pull it all together with some conclusions from that value investing standpoint. Stick with us.
Okay, picking up in the second half, let's dive into market sentiment around MicroAlgo. And the word that comes to mind immediately is volatile.
Yeah, that's putting it mildly, isn't it? The 52-week range is just staggering. What was it, like $1.11 up to nearly $510?
Something like that, yeah. Extreme swings. We saw a big run-up in 2024, but then a significant decline so far in 2025 based on the data we had.
That kind of price action usually tells you it's heavily influenced by market sentiment and, well, speculative trading rather than just fundamentals.
Absolutely. Yeah. It behaves more like a trading vehicle than a stable long-term investment based on that volatility. We did see a Pietrassi F-score aforementioned.
Right, which is sort of okay. It suggests some fundamental strength, but it's not exactly top-tier financial health on that scale, is it? Middle of the road.
Exactly. It's not flashing major warning signs on that specific metric, but it's not signaling robust health either. Now, where it gets really interesting is the short interest.
The bets against the stock. What are we seeing there?
It's exceptionally high. Around 18.37% of the float reported as short interest. That's a very significant portion.
Wow. And the cost to borrow shares to short them?
Also incredibly high. The short borrow fee rate was noted as being over 85%. And even recently exceeding 100%.
Over 100%.
Right.
You're basically paying more in interest per year than the value of the shares you borrowed.
Effectively, yes. It means demand to short the stock is intense, and supply of shares to borrow is tight. Consistently high fee-narrage short volume ratios, often over 50%, and significant fails to deliver in April 2025 also point to this.
So what does all that tell us?
It paints a picture of a highly contentious stock. There's strong bearish sentiment, lots of people betting the price will fall. But that combination of high short interest and high borrowing costs also creates the potential for extreme volatility, including, short squeezes.
Where shorts are forced to buy back shares quickly, driving the price up rapidly.
Precisely. So very high risk, very sentiment-driven environment.
Okay, so a battleground stock in terms of sentiment. Who actually owns it then? Who's holding shares through all this volatility?
Well, that's another striking point. Institutional ownership is exceptionally low.
Meaning the big mutual funds, pension funds, hedge funds, they're mostly staying away.
Largely, yes. Only a very small number of institutions hold any positions, and they tend to be minor stakes. Ketong International Asset Management was mentioned as the largest institutional holder, but still with a relatively small position overall.
What does that usually signal? Low institutional ownership.
It generally suggests a lack of conviction from the professional investment community. They might see the risk profile, the speculative nature, the governance issues we discussed, and decide it doesn't fit their mandates or risk tolerance.
Okay, so not much institutional support. What about insiders? We know WeMe has that massive controlling stake.
Right, that 67.65% held by WeMe Hologram Cloud is the dominant ownership feature. And they have that 10-year lockup commitment, which provides some stability, but also, as we said, concentrates power.
And the actual executives, CEO Min Shu, CFO Li He.
Still that unclear picture. CEO listed as ownership, CFO as a shareholder, but amount unknown. What you often like to see as a positive signal is significant open market purchases by top management.
Buying shares with their own money because they believe the stock is undervalued.
Exactly. The absence of that here, well, it doesn't necessarily mean anything bad, but it doesn't provide that positive signal of alignment either.
Got it. Okay, let's synthesize all this now into a risk assessment. We've touched on many risks already, but let's lay them out clearly. Operationally.
Number one is the dependence on that single business segment, now algorithm services. If anything hits demand in Chinese internet ads or gaming, they feel it directly.
And the quantum tech itself is a risk, right?
Huge execution risk there. It's nascent technology. Can they actually develop it, commercialize it? Plus, reliance on key personnel in such a specialized field.
Okay, financial risks, we hammered the dilution point.
That's top of the list. Significant potential shareholder dilution from those convertible debt deals. Reliance on capital markets on potentially unfavorable terms because of the volatility. And the big question, is that 2024 profit sustainable or a one-off?
Market risks seem pretty obvious given the volatility.
Yep. Extreme stock price volatility is a risk in itself. It's a small cap or microcap stock, inherently more volatile and less liquid. And the price seems heavily influenced by sentiment swings, not always fundamentals.
Competitive risks. Facing giants.
Intense competition from much larger, better-funded global tech companies and those specialized AI quantum firms. Real uncertainty about whether MicroAlgo can carve out and defend a durable competitive advantage and economic moat.
And then the layer of operating mostly in China, regulatory and geopolitical risks.
Absolutely. The PRC regulatory landscape is complex and can change fast. Cybersecurity, data protection, algorithm rules. Then there are the general risks of doing business in China. The legal system, potential policy shifts, government intervention.
And the U.S.-China dynamic.
That adds another layer of uncertainty. Geopolitical tensions can impact cross-border business, investment sentiment, supply chains.
The research mentioned potential impacts from U.S. tariffs in 2025. How could that play out?
Right. Even if MicroAlgo doesn't sell much directly into the U.S. now, potential tariffs on software licenses, intellectual property, cloud services, maybe even AI hardware software from China, that could increase costs for any future U.S. partners or customers. Or it could squeeze MicroAlgo's margins if they absorb those costs, especially if they plan future expansion involving the U.S. market, even indirectly.
Okay. And finally, technological risks, beyond just execution.
Well, the experimental nature of quantum computing is key. Timelines and outcomes are just highly uncertain. Plus, the whole field of AI and algorithms moves incredibly fast. There's always the risk of rapid technology obsolescence if you can't keep up.
Whew. Okay, that's quite a list of risks to consider. Let's try to bring this home now. Chapter 7, conclusion. How does MicroAlgo stack up from that value investor perspective we started with?
So if we go back to those core value investing principles, understandable business, favorable long-term prospects, able and trustworthy management, and an attractive price with a margin of safety. MicroAlgo presents, well, significant challenges on several of those fronts. The quantum computing aspect makes the long-term prospects difficult to assess confidently. The competition is intense. And we have those concerns around management alignment, particularly regarding shareholder dilution through financing.
And finding an attractive price or a margin of safety seems incredibly difficult with this level of volatility and speculative trading, right? How do you even determine intrinsic value here?
It's very, very tough.
Yeah.
The stock price seems disconnected from traditional valuation metrics much of the time. So confidently establishing intrinsic value and then demanding a discount to that price, a margin of safety, is extremely challenging.
So if someone was still interested, despite the risks, what should they be watching closely?
Key things to monitor would be, can they deliver consistent financial performance, especially profitability and positive operating cash flow? Can they actually commercialize any of that ambitious R&D? How do they manage capital allocation going forward? More dilution. How do they position themselves against competitors? And, of course, keep a very close eye on the regulatory environment in China and any insider activity or changes in ownership.
So the final conclusion, putting it all together, how does it align with a traditional value philosophy?
Based on everything we've discussed, the speculative technology, the intense competition, the governance concerns, the dilutive financing, the extreme volatility, I'd say MicroAlgo currently exhibits a risk profile and characteristics that seem largely misaligned with a conservative, traditional value investment approach.
It leans much more towards speculative growth, maybe.
I think that's a fair assessment.
Yeah.
Much higher on the risk-reward spectrum, with emphasis on the risk for a value perspective.
Which really leaves a final thought, maybe for you, the listener, to ponder. Given MicroAlgo's focus on genuinely cutting-edge but very unproven technology and its incredibly volatile stock, where do you draw the line? How do you personally balance chasing that potential massive upside versus navigating the very, very real risks we've outlined? Something to really think about for your own approach.
A crucial question for any investor considering such a stock.
And hey, if you want to continue exploring companies and these kinds of questions with us, please do subscribe to Stock Analytics AI on YouTube.
And just the standard reminder, this discussion was based on publicly available research and AI analysis conducted before this recording. It's purely for informational purposes. It is definitely not investment advice. Always do your own thorough research and due diligence before making any investment decisions.
Absolutely. Well, thank you for joining us on this deep dive into the complex world of MicroAlgo.
Yeah, hope this provided some valuable context and things to consider. Definitely dig deeper yourself if you're interested.